Hello, it's Tuesday, July 17th, 2012, and I'm Tony Christopher with the Daily Outlook from UFX Markets. Wall Street closed the trading day in the red, dragging the S&P index lower for the seventh time in 8 days after the International Monetary Fund cut its global economic forecast and retail sales unexpectedly dropped. The Nasdaq fell by 0.40%, the Dow Jones lost 0.39% of its value, and the S&P closed negative, dropping by 0.23%. The U.S. dollar fell versus most of the majors, adding to bets the Federal Reserve will take further steps to bolster the economy. In addition, the risk aversion among traders decreased amid optimism governments from China to the U.S. will stimulate the world's largest economies and temper the concern about global growth in 2013. Today, core CPI is expected to grow by 0.20% as previously. TIC long-term purchases are expected with $45.70 billion versus $25.60 billion previously. Industrial production is expected to grow by 0.40% versus minus 0.10% previously. And Fed Chairman Bernanke testifies to Congress. With the euro, the RSI is around 58, meaning that it is still on an uptrend. Overall, the euro dollar traded with a low of 1.2174 and with a high of 1.2290. Today, German ZEW economic sentiment is expected with minus 17.30 versus minus 16.90 previously. British pound now. The cable touched earlier today the resistance level at 1.5680, and if it sustains above the support level of 1.5570, the trend is likely to continue being bullish and rise above. The pair may test the next strong resistance level of 1.5720. In addition, according to the moving average tool, the trend remains bullish. Today, CPI is expected to grow by 2.80% as previously, and a BOE inflation letter is expected to be released. Turning to commodities now, gold traded unchanged, closing at $1,589 an ounce, and crude oil rose by 1.70%, rising for a fourth straight session, crude's longest winning streak since April, closing at $88.20 a barrel. Well, that's it for today. I'm Tony Christopher for the Daily Outlook. Be sure to find out more at ufxmarkets.com.